Nobody's going to try to say here that there's any pattern in war, really, but there might be some patterns in metals prices related to it. And I hate to say that, hey, that's the interesting part of this, because it's not, but we're still going to take a look. So the price of gold has continued to spike, and that, of course, is on news surrounding the conflict in Israel. Now, if we were to try to look past the human tragedy of the event, just look at it only in terms of what it means to those not directly affected, what it means to ongoing market turmoil, to metals prices, well, there's a probable pattern that we could find in all of this. And if we were to back up a little bit further than that, there are really two patterns. Now, none of us can really say what happens next in the Middle East. We're not even going to try, but we don't have to go back very far to find price reactions to something similar to a regional war. So we're going to get into that, and we're going to talk a little bit more about that second pattern as well. So if we look at the Russian invasion of Ukraine, we can see what happened to gold price. Russia invaded February 24th, 2022, and gold spiked nearly 7% within 2 weeks. So we've all heard that saying that investors buy the rumor and they sell the news. It means they sell on the news. Well, the idea is that the market pops on the fear of the unknown, and then it falls when it's clear what's happening. So what we don't like is just not knowing. So if we go back to that chart, we can see that the gold price rally was gone within about 6 weeks. And that was a buying rally on the unknown. So the sell-off that came afterwards, that came along with just a better picture of what was happening there. It doesn't mean that anything there improved. It was just another case of buying on fear of the unknown and then selling when the actual news caught up to it. Now, looking at what's happening right now, Hamas attacked Israel October 7th, and a week and a half later, gold is up right around 7%. This chart shows closing prices, so we're not going to see today's price, which at the time of recording is right around $19.50. Now, what we don't know, of course, is where the top is, but since gold was on a downtrend prior to the conflict, the assumption would be that we're going to see a fall in price at some point, like we saw last year as the picture in the Ukraine became a little bit more clear. Now, if we want to map this to attention and how long that sticks around, we're going to use Google Trends here. We can see searches for the word war, and we can see that right now they're spiking. Now, we saw something similar last year based on Russia's invasion. We saw that trend also fall off pretty quickly. Now, right now we're at the very top of a similar trend in terms of where attention is directed, and if history rhymes at all, we'll probably see a similar fall off. So the pattern that I mentioned is pretty straightforward. You have a global safe haven rally immediately following regional conflict. I'm talking about this stuff, buying up gold. That's on the fear of the unknown. And then a correction back to the prior trend. So if we mapped it out using what we saw last year in late February, well, it was 2 weeks to the top of the rally, and then it was a full sell-off within 6. Now, the details here, of course, are a lot different, so we can't say that we're just a few days from the top and then it's 4 weeks until we're back where we were. But the idea of a rally on the rumor and then a sell-off on the news, that's a pretty likely pattern. Now, I mentioned a second pattern though, right? Well, this is just an observation on the frequency of these regional conflicts, but we're seeing a lot more of them. And if we were to look out a little further than that, an observation on the wider friction between countries, well, China and Russia versus the US, the tension there is pretty obvious. And it goes well beyond these three countries. We're seeing alliances creating teams for possible wider conflicts. So while we might be seeing a pattern where conflict rallies sell off, like 6 weeks or whatever the time frame is, that might tell you to just let the price spikes work themselves out. So use patience, don't get caught up in it. But we might also be seeing an environment for more conflicts, which really shouldn't be a surprise. Now, the reason that I mentioned that second part about the potential for increased conflicts is not to freak you out. I'm not here to tell you to put all your money into gold and freeze-dried meals. I'm not here to say the end is near. I'm just pointing out that even though I think we're going to see a sell-off like we have in the past, I don't think that has much to do with the midterm outlook for gold. I don't think it's just always a matter of time before gold price sinks. We still have this narrative about inflation, about Fed policy, and when that shifts, we're still going to see a dramatic impact on gold. And that's important because I'm willing to bet that some people will begin to think that if and when gold sells off in a few weeks, that it's just because of poor performance, just because gold is a bad investment. Now, if we're clear on what's actually happening over the short term, it just makes it a lot easier to plan for the longer term. So let's call it good there. Let us know what you think. Are you buying on the rally? Are you waiting for a sell-off? Maybe you think I'm just wrong about what we're seeing altogether. Let us know. And then while you're in the comments, be sure to hit the like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.